The biggest risks, in my view, obviously there are always the risks you don't know. But the Donald Rumsfeld, unknown unknowns. But I would say one risk that's been discussed a lot in the market is quite focused on now is, do we see a self-reinforcing dynamic take place in the U.S. Labor market? We saw the unemployment rate rise, 0.5 from its low. The SAM rule was triggered. I won't go through all of that, but bottom line, so there's some concern that if unemployment rises too much, then then people start cutting back on their spending. They cut back on their spending. Companies, therefore, get rid of their employees. That's a risk. And that's, I think, what the Fed is quite worried about. I don't see any signs of that being a significant risk right now, but I would be watching those the range of unemployment data in the U.S. quite closely to monitor for that risk. The other major risk I would just highlight from a financial economic point of view is what I highlighted before, the Liz Truss moment. Governments have a lot of debt. If whoever wins the U.S. election, Kamala Harris or Donald Trump, if either of them come out and indicate that they're going to do a lot of unfunded tax cuts, I don't think markets react very well to that. So again, the U.S. is different from the U.K. It'll probably survive that, but could we see more volatility in the government bond markets? I think yes. And that obviously feeds through to risk assets generally. And then we all know, the situation in the Middle East, et cetera. It's hard to know how this will resolve itself. I would just say from a very practical economic point of view, the real transmission, of course, is oil prices. Watch oil prices. If Iran starts getting pulled into this in a serious way in the U.S. and it leads to a sustained rise in oil prices, then that's bad, clearly, for the global economy. But again, the key word here, I think, is sustained rise. A spike in oil prices, we can probably get through, but a sustained rise. So that's something to watch as well.